Welcome to Tony at 12. I'm Tony LeBlanc, and today I'm in conversation with Toby Birch, who is a senior investment manager at Gower Financial Services. We're going to take a look at what has been happening in the world of finance over the third quarter of 2021. Now, I must stress, all opinions are personal and no investment advice is being given. Toby, good to see you again.
And you again, it's a quarter shot past.
Oh, it's frightening, isn't it? Do you find, I just find that time flies totally out of control, but there we are. So we're going to have a look at what's been happening over the last 3 months. Let's start off with the UK. Now, I know that you don't like the FTSE 100 as a yardstick, but for most of us, it's the highlight that we hear of when we turn on the television or listen to the radio. And looking at the FTSE 100, it's sort of been flirting between the high 6,900s and the low 7,200s and doesn't seem to be doing anything else. Got any views?
Yeah, well, it's actually not been a bad year for the UK stock market. If you take it from from October to October, it's actually up there battling with the American indices, the Nasdaq and the S&P 500. And I think this is really because it's more of a value play, which does well when interest rates are potentially going to go up. And the more traditional industrial stocks start performing after years in the doldrums. So it might have been flat recently, but on the whole, it's done a pretty good job.
I mean, before we had the COVID business, it was up to about 7,800, wasn't it? The FTSE 100.
Yeah, that's really a time when growth stocks in the America's Nasdaq Technology Index really starts to fly. And it wasn't until more recently that the more traditional stocks in the FTSE 100 really began to perform. But yeah, I mean, if you look at, I can remember back well over 20 years ago now, where the FTSE wasn't far from where it is now. Yeah. Fortunately, it has been a dividend machine, so you've had income being churned off from the stocks. That's some recompense.
Yeah. Okay. So as far as the UK is concerned, reasonably optimistic. Do you think it will get back to 7-8 in due course, or are we going to see it in the low sevens?
Yeah, I think it'll pick up. We're just getting people to saying that the FTSE and the UK market generally is at about a 30-year low in terms of values compared to other markets. Yeah. And this has really set the bell ringing for private equity to come in and start snapping up, really good value stocks. Yeah. And if anyone knows when there's a bargain, it's these private equity firms,
which we will come to in due course during the course of the interview. How about the US? Has the Biden effect changed things much, or where do you see that at the moment?
It's all been fairly miserable in the States, from what I can see. But the issue is that as ever, it's not so much about the government; it's about what central banks are doing. And we've seen these bond yields or interest rates start to spike up again. And this acts like it's almost like pulling back the reins on a horse, where these higher costs of money are putting a bit of a dampener on things. So until August, we'd had a nice steady run, lots of new record highs in America, and everything's gone off the boil. I think journalists have called this the September slide for good reason, because virtually everything apart from natural gas and oil has dropped. And it's been very frustrating, because you want to report to clients at the end of the quarter. Until a month ago, things are going tickety-boo, and then get whacked along with everyone else, pretty much, I think.
Yeah. I mean, do you think the tech stocks will take a bit of a hit if the global tax situation is resolved? Because, obviously at the moment they're getting the benefit of very low taxation compared to their turnover.
Yeah, I mean, the tech stocks or tech companies are very influential, and a lot of this is a bit of a pantomime to make it look as though you use the words crackdown and tackling on taxation. And these guys make considerable donations to political parties. They negotiate their own tax rates that they set up in very friendly jurisdictions, like in Ireland, for example. Yeah. So yeah, there's a lot of noise about bashing billionaires and statements like tax the rich, but in reality, they're very cozy with governments, and they just threaten to pull out your country if you if you pressure them. So
Yeah.
it's really that the people who bear the burden of taxation tend to be the small and medium-sized companies who are the biggest employers as well,
Yeah.
as we've just seen from the recent national insurance hikes from the Conservatives.
Yeah. What about Japan? What's happening there?
It's Japan's been an okay performer. A lot of Asia's been struggling, but Japan has got some similarities with the UK in terms of the industrial side. But one snippet that popped up the other day, which quite surprised me, was the demographic effect, because, and we all know China's at the leading edge of aging populations, but
Yeah.
I've read that by the end of the century, the population will halve,
Right.
which is I was quite taken aback by, because all these people are banging on about overpopulation and people destroying the planet. Well, there's not going to be many left of us.
So it's going to take place by natural selection. I think Darwin could have done a good job on this one.
Exactly.
Okay, moving on to China. We've heard all about this Evergrande property company suspension on the Hong Kong exchange. Presumably, it's also listed in Shanghai, is it?
Yeah, I mean, the domains of foreign access is through Hong Kong. So yeah, they suspended it just to stop a kind of sort of endemic collapse. But the good news is that they've actually sold one or selling one of their divisions for about $5 billion, which might sound a lot, but when you have debts of $300 billion, that just covers a few interest payments.
Yeah.
I don't know how long, 6 months or a year. So they bought themselves some time. And really, this is the end result of the biggest property boom in mankind's history. It's nothing short of that, and all property comes with high leverage, and so things that are coming back to haunt them. And to some extent, to foreign investors, it shouldn't be a big deal, because they only hold, I say only, they hold $20 billion of the total $300 billion of debt. But it's a knock-on effect, because property development makes up about a third of China's economy. So that has all kind of unintended consequences when that slows down. So even if it's like buying European luxury goods, China is such a major part of the global GDP now that when property stalls, everything stalls. So I also think that the Chinese government would intervene potentially, or take the hit among its government-owned banks who do most of the loans, because what you don't want is this appearance of financial ineptitude, or just like the market is, or the capitalist element of China has been allowed to run free and destroy things.
Yeah.
So what the Chinese have also been doing at the same time, having a bit of an existential crisis, because although they're very tech orientated, they don't like the influence of tech billionaires. So they've really reined in on high profile figures, and so the stock prices have really been whacked to some really great bargain value prices. But also they've been clamping down on online education, because they think just because you've got money doesn't mean you should have a better education than your peers as a student. So there's a kind of philosophical debate going on. And on one hand, you can respect why they are so aggressive towards these tech billionaires, because the ones we've got in the West are throwing their weight around and censoring the internet and various social media and platform sharing channels, which is really, really quite appalling. And
so, looking at it, Toby, do you think really we're in a strange situation, because whilst there's not a Cold War as such going on between the West and China, there is obviously friction. Oh, yeah. Having said that, we still depend upon China for a lot of goods.
Exactly.
And of course, when we had the Cold War with Russia, they didn't have much to offer in any case. I mean, it could be just a good old Cold War, but it's a very difficult conundrum, isn't it?
It is indeed. There's all sorts of consequences from this, because China feel like they're being ganged up on. So you've got this sort of Anglo-Saxon style pact of Australia, America, and Britain, and they accuse the Australians of being what they call the cat's paw. So they're on the leading edge of attack. So obviously, Chinese have pushed back, and they've been limiting imports of Australian coal. So it's really, they've got plenty of muscle to fight back. It is different from the last Cold War. The thing is, the Americans need a bogeyman to attack, or some foreign entity, and it's always pick on the foreigner. It's been going on since Bismarck.
Yeah. Oh, yeah, absolutely. I remember many years ago, I went to Workers' Education Association lectures, and one of the key things they made there is every country has to have an enemy as a potential whipping boy. And I think that's very true. I was very interested, Toby, to see I think it was the Telegraph the other day, that the top performer this year is India.
Yeah, I mean, that has been a surprise. In some extent, it could be a bit of a pressure cooker, because when you keep interest rates really suppressed in a high inflation country, it really is piling up problems for the future. So it looks great on paper, looks sort of rosy cheeked and active, but this could be a potentially negative effect longer run if prices overshoot, and they always tend to do that. Asia's been a very mixed bag, and India's although it's a big population, it's a small part of the world's stock markets. It's not something we buy directly. We might hold it in an Asian fund, for example. But yeah, I was surprised too.
But you'd advise caution on that one.
Yeah, I mean, we don't have a huge amount in emerging markets anyway, unless it's high risk portfolios. So we've been holding China, which has definitely hurt recently, and more general Asian funds as well. So it's been a tough month, I have to admit.
Yeah. Looking at Europe, new chancellor lined up for Germany. Is that going to have much of an effect, do you think?
I don't think so, really. Again, it goes back to central banks. When you have negative interest rates, this has got such a damaging effect on your pension funds and your government debt. It just means that they're stuck in a hole where they have to keep printing money and basically producing these bonds, which will central bank mop up. So it's like a sort of circular fountain effect where they create money, central bank buys it, and the debt gets bigger and bigger. So that really has stymied Europe as a macro point of view. I mean, individual companies, again, industrially, you've got some good names out there and plenty of work, but with the lack of demand from China, this is hitting some more luxury end of Europe, particularly in France, for example.
So that's interesting. And of course, you mentioned Australia just now.
Yeah.
As far as their relationship with China is concerned. Now, interestingly, of course, they rely a lot on coal exports to keep their balance of payments going through okay. And I was listening to a program the other day where it was a coal mining town somewhere in, I don't know if it was New South Wales or Victoria, and the people living there were very loath to give up the coal industry. They thought if that packed up, their standard of living would fall through the floor. But presumably I have to, won't it?
Well, people keep, again, banging on about this zero carbon stuff, but the reality of the supply of energy means that you'll have coal and crude around for a long time. The renewables, again, technology might change, but the renewables just can't keep pace. We had a good example in the last winter in Germany where all the electric buses broke down because they couldn't open the bus. So they had to get diesel ones out and the storage. So yeah, there's a lot of flag waving and sort of touchy-feeliness about the green side, but reality is that we're in for a real, almost like a credit crunch for energy, and we're seeing natural gas prices soar, crude prices above $80 the first time in some years, and it's really taking a toll. So all this sort of philosophizing is great until people get cold and have to pay more for energy.
Yeah, and I mean, it's really hitting Europe as well as the UK and probably, a lot of other countries. Now, the other thing, of course, that's a problem at the moment is the shortage of computer chips throughout the world. And that affects everything from motoring through to mobile phones, I suppose, and everything else. Why has this occurred? Why have they got so far behind in production?
I think about producing chips, it's very slow. It takes weeks and weeks to churn these out, and have to remember there's a major backlog still to get through. Yeah. So you've got this backlog, and you've got to pick up in activity as restrictions fall away. So it's just something that it's like an inelastic thing where it doesn't matter what the demand is or the price is. You just can't churn them out quick enough.
Mm.
And you've got other issues over the components of these chips, because governments think you just say, oh, well, we're going to shut down the economy and we'll turn it on again later. It just doesn't work like that.
No.
There's an essay written in the 1960s called I, Pencil,
Mm-hmm.
and it's just to show that even for the most simple item, it takes hundreds of processes to make the most basic thing. And chips are really complex.
Yeah.
And they find these rare metals, and of course, Afghanistan going, China are all over that country trying to get these supplies. So there's so many unintended consequences of what's gone on, and it's fine for government staff to stay home and work, but other people have got to go out and manufacture. And it's just so many clogs you've got to get through to get things done. So one consequence of this is that I believe in the UK, car production's down to its lowest level since the Suez Crisis in 1956, whatever. And it just go on and on. So when central banks talk about transitory inflation, it really isn't. This is going to take a long time to unwind.
Yeah, and we can point the finger at COVID for most of this, can't we?
To an extent, but I think a lot of history is made up. I think if I can summarize any history cycle, it's a case of action, reaction, and unintended consequences.
Yeah, quite. Yeah,
we're at that unintended stage where it's just everyone's like driven by fear into just stopping everything. By the time you try and start again, small companies just can't reopen. They've got they've lost capital. Okay, there might be furlough payments, but they've lost a lot of earnings, and they don't have the money to employ new staff at higher rates. So it's very, things are creaking for sure.
Let's take a look at the Morrisons auction. That was interesting, wasn't it? Because I can't remember a situation in the past where effectively a takeover has been governed by an auction process.
Yeah, it's not something that rings a bell with me. It all went down to the wire based on odd and even prices at the last minute.
Yeah.
And I think they're both American private equity firms, but they like I was saying before, they can really spot a bargain. So Morrison has lots of freehold property, and you might think, well, is that such a big deal nowadays? But it's still worth something, and they have, I think, the bulk of their assets are property, and they're priced as if they're, at a big discount. So these private equity folk aren't stupid. They can see it's cheap as chips.
Yeah,
they've got a nice steady flow of revenues, and what they'll do is they'll do buy and lease, sale and lease back.
Yeah, I was going to say that. Yeah,
it's just a bog standard formula, and and they'll milk it with dividends for themselves.
Yeah, and
they'll sell it on. It's just, there's nothing terribly scientific about it. If we're lucky, again, it's one of the biggest employers in the UK. The staff won't be carved out, and the pension funds will be left alone, because these are all targets for voracious financial folk.
Yeah. But of course, the thing is that with those freeholds, can we just explain to our viewers how sales and leasebacks work in very simple terms?
Yes, so you've got an asset. So imagine you've got a house, and rather than owning it, you sell it, but then you start paying rent. So the person on the or the owner of the company is sweeping up all this cash from the sales. Okay, they've got to start paying out some rent, but it's a tiny fraction compared to the total value. And their lifespan of ownership is usually about 7 years for projects. So by the time you've borrowed loads of money at dirt cheap rates, you've sold the properties, it really is a cash generating machine, and then they'll sell it on. But often what happens is they're left with a huge amount of debt in some cases, as we've seen.
Yeah.
And the company falls, people lose money on the pensions, and it's and the poor old staff are left to bear the burden. And these guys walk off with huge dividends. So it tests the moral compass of certainly me, for example. I'm not sure I'd be comfortable investing in some of this stuff.
No, I mean, I find it uncomfortable, because they are literally ravaging the asset and ending up with as you say, nothing to show for it in terms of 7 to 10 years, but taking a lot of money out in the meantime. So there we are. We've talked briefly about oil and gas prices. West Texas was minus, wasn't it? That not so long ago.
Yeah, back last year, because with such a slowdown in activity and a glut that tankers were, I think I'd have to pay to take the oil away. They're being paid to take it away, and so that's it's rather annoying now, because all these energy providers are now jacking up prices, or in some cases they can't and are going bust. But if they'd had any sense back then when prices were low, you can buy these commodities in the future. With forward prices, lock in a good deal, and then you're covered for the future. So I don't know what's happened in these cases where they should have been getting the bargains at the time. Obviously, they're not going to pass it on to customers, but at the same time, they could have made a lot more money to save themselves. So a lot has gone wrong in the financial planning for energy firms, and I guess, like everyone else, they're just caught in a panic and thought, why would I buy something at high price in future when it's dirt cheap now? All fine with hindsight,
But I mean, if they bought it at $40 a barrel, they'd have done very well by now, wouldn't they?
Exactly, exactly. Sold it a lot higher.
Something else that quite tickled me the other day was that Russia may have to buy gas back from Europe to fulfill their contracts.
Yeah, it sounds like a strange one, because they're building a pipeline via the Baltics directly to Europe. Because although, again, history has long strands and threads and unintended consequences, we mentioned. I mean, the Ukrainians and Russians haven't got on for a very long time.
That's right.
Stalin created a famine there in the 1930s. He forced them to give their food to Russia, and obviously millions of people died. And it's one of the reasons why the Ukrainians were so glad to see the German invasion, because they've been so badly treated. So you've got this generations of grievance against Russia. So that's why the Russians weren't keen to have a pipeline going through the Ukraine. And there's been all sorts of battles and aggravation. Also, the Ukraine is if you like, a quasi front line for the West. So they're using these sort of middle satellite states, which are pro-Western, to accumulate armaments and military presence, to really just kind of I'd say goad Russia, but just let them know that we're still here. The Cold War with China doesn't work out. We can pick on you instead. But I think that
given the fact that they've got to buy gas from Europe, presumably that's just a paper transaction.
It must be, because that was
you can't put the pipeline in reverse.
No.
But it just goes to show how vulnerable countries such as Germany have become by depending on countries such as Russia to provide a lot of their energy. But there we are.
And that's why France went nuclear back in the day, because they could see the deficit in energy, for sure.
Yeah, very much so. And talking about power shortages, just as well that Norway thing came online when it did, because the one in Kent blew up, IFA 1, and it's going to take months to fix, apparently.
Yeah, I think all these things happen together at the same time, and I do feel sorry for the providers there, because you just can't forecast these things. And stuff just goes wrong all at the same time. Get used to it in stock markets, but in real life it's a bit more painful.
Yeah, and we've seen a lot of these smaller providers in the UK go to the wall recently.
I assume they can't pass on the price increases, because when natural gas goes up to 300-400% in a year, I know that the gas provider in Guernsey certainly passed on their price rises, because I've just had to
you just paid a bill,
debit, which is like a bit eye-watering. But I think the kind of deregulations just had too many players involved, and the weaker ones will fall away. The whole energy provision might come under more regulation and state control, as it always does when things go wrong, for better or worse.
Yeah, quite absolutely. And richer and poorer. Looking at the Labour situation in the UK, it's quite clear that we are, they are missing the labour that they were getting on the cheap from Europe. What's the solution there? Do you think this idea of selective visas is a good idea?
Yeah, I mean, it's whenever something goes wrong, you always get the Brexit thing rolled out.
Yeah,
It's all about Brexit. But actually, it's as much our own government's issue, because the people who issue licenses are working from home. So you've got thousands in a backlog. So I think governments don't blame themselves. There's always someone else or another existential item. So there will be more drivers coming through. But on your point about Europe, I think we might see more happening with the Commonwealth potentially.
Yeah.
Because certainly in Guernsey, you don't even notice, but I've had a lot of staff coming from Africa who are absolutely brilliant. I've been out for dinner a couple of times. Had fantastic service, and this is the power of pricing and shortages, is that you look elsewhere for opportunities and other staff, and we're fortunate to have that cultural connection with the Commonwealth language. Yeah, and maybe that can fill a gap.
That's the way in which they should be aiming, possibly the government.
I think so. I mean, if Europe's Europe is on an anti-UK course anyway, so trying to do anything with Europeans is really tough at the moment. Even getting over to my house in France is I haven't been there for 2 years, but I'm not looking forward to all the bureaucracy that involves.
Well, that's right, absolutely. And they are, the Europeans, pretty good at putting the old spanner in the works when it suits them.
Yeah, or just ignoring stuff when it suits them.
Yeah. I mean, I always think this is why Britain, we played it by the rules. In other words, we signed up to something, we stood by it.
Yeah.
A lot of the others, particularly the Mediterranean states, would sign up, shrug, and just keep going as they've always kept going. So, crazy.
I mean, and they did get crazily indebted as well as a part of that, because the discipline wasn't there.
Yeah.
So Italy's struggled, in Greece. I remember going over 10 years ago now, so after the 2008 crash, and obviously the sovereign debt crisis at the time, and it really was pretty grim. So there's always a price to pay by taking shortcuts.
So the cure in the UK allegedly is higher wages, which means higher inflation inevitably. Yeah. So where are we there on that? Because you're younger than me substantially, but I can remember the 80s.
I remember the 70s, even when I was a kid.
Okay, so I mean, yeah, that's right. And we had that stupid prices and incomes policy, whereby if prices went up to a certain level, that would trigger a rise in pay, and it was just crazy. And are we likely to see that again? Do you think?
No, but I think that there's always a danger when you try and impose price controls. It stops the capitalist mechanism from working, and when you have prices too high, supply comes in and it readjusts. When you interfere with it, things start going again. Consequences are unknown. I think that high wages aren't to be feared, because consumers are such a large part of the economy. The more they earn, the more they'll spend. So I don't have this kind of feudal landlord approach of saying you don't pay the peasants anymore. Don't let them enjoy life. I think it's great that wages are increasing from bottom up, and it's kind of it is a cumulative win, because more people have to spend, the more corporates make, more investment. It's a bit like I talk about the feudal era. After the Black Death, wages shot up because of lack of labour, and it spurred an incredible boom because people were more mobile and had the Renaissance. And it's not something to be feared necessarily. Inflation at the moment is negative because it's what's called cost push. Right. So it's the input elements which are driving up prices, rather than lots of demand and positive news. So you could get the worst of both worlds if you have low growth, higher costs, and higher inflation.
So is that stagflation?
Yeah. So that is again a term we've not heard since the 70s, where the economy's ground down, but you still get high inflation. People got less money to spend. The wages aren't going up, and it's all very grim. And it means that unions are then driven to have more strike action, and you get an accumulation of negative effects. Where, again, we just talking about the unions earlier. It really was grim. I'm from Liverpool originally, which was union home base. Very
Derek Hatton and co.
Yeah, I remember. Although he's a fellow Everton supporter,
Yeah.
I won't encourage people to act like that way. But I've even had teachers where at my more junior schools preaching, the communist ethos. It was really grim. And staff in hospitals wouldn't, threaten not to feed patients if people like my mum, who was a doctor, she'd try and come in and do some cleaning, and they'd just say, we won't feed patients. It really was a grim time with rubbish piling up. But I think, like inflation in the 70s, that was the worst case, and I don't think we'll get that again, touch wood.
Well, the union representation isn't what it was. I mean,
no.
You could argue in the 70s the unions were running the Labour Party.
Yeah.
When they were in government. And that isn't so much the case now, I don't think. But obviously, if inflation gets too high, interest rates go up.
It's kind of it's catch-22, because the people who set interest rates, also the ones who've been buying all this government debt.
Yeah.
And as I mentioned before, as interest rates go up, debt prices go down. So they've accumulated all these government bonds, and if rates go up, they're going to lose a hell of a lot of money.
Yeah.
Because they've bought these bonds at massively overinflated prices
to
try and stem interest rates.
Yeah.
So what they've got to do is it's got to talk the talk and say, we're going to put up rates and we're going to be tough on inflation, when in fact they don't really. It's called jawboning, which is a biblical term.
Okay.
Our old friend Samson, when he fought off the Philistines, he had his ass's jaw he beat them all off with. And the idea of central banks is they talk tough.
Yeah.
And the market backs off, and long-term bond yields come down, and things calm down. But there's a point where you can talk about transitory inflation, but everyone knows and conceives that it's here. And if you lose credibility and start saying it doesn't exist, that's got a real potential trigger point for loss of faith in government, currency devaluation, and really have a run like you saw in the sovereign debt crisis, like the 1920s, which was really quite incredible. So I think they've got to be careful how they go about this, because they can't raise rates, but they can't be seen to be falling behind the curve, as financial people say.
Yeah, that's the way it is. Well, there we are. We've unfortunately run out of time.
Okay.
It's been an absolute delight talking to you as ever. Many thanks for sparing us some time. I know a lot of our viewers like to see what's going on in the world of finance, and you're definitely the man to provide that information. So see you just after Christmas, I suppose.
Yeah, Tony.
If the next 3 months, if the next 3 months flies as quickly as the last three, well, what can we say? Anyway, thanks very much, Toby.
Thanks, Tony.
Cheers.